Stop buying Nvidia at 35 times earnings. Seriously. If you're piling into the AI hype at the top of the data center cycle, you're about to miss the next phase of the AI revolution. Here's the counterintuitive truth that Wall Street is slowly waking up to. The second wave of AI isn't in the cloud. It's in your pocket, your car, your home. Qualcomm just reported earnings. Revenue fell. Handsets are down. The bears are loud. But the stock jumped 15% in a single day. Why? Because investors finally see what's coming. A leading hyperscaler just signed a custom silicon deal with Qualcomm. Automotive revenue hit a record $1.33 billion. And the company is trading at just 17 times forward earnings. Compare that to Nvidia at 35 times. Let me break down why Qualcomm could double to $340. And stay until the end for the 3 secrets that will change how you value every AI stock from now on. I'll admit something. I was late to the Nvidia trade. I thought AI was just about data centers, and I missed the massive run. I won't make the same mistake with Edge AI. Today, I'm going to show you exactly why Qualcomm is positioned for the next phase of AI. We're going to look at the bear case, Apple's modem loss, memory shortages, then the bull case, on-device AI, automotive, custom silicon. And by the end, you will understand why analysts think this stock could double from here. Stay with me. Let me start with the bear case, because it's real and you need to understand it. Bear number 1. Apple is leaving. Apple is developing its own modems. The iPhone 18 Pro is rumored to use Apple's in-house C2 modem. Qualcomm has warned investors that it expects to lose Apple as a modem customer once their licensing agreement expires in 2027. The revenue at risk? Approximately $7 billion. Bear number 2. Memory shortages mean slower upgrades. AI-driven demand for memory chips is tightening supply and raising component costs. That means more expensive phones. That means slower upgrade cycles. Handset revenue fell 13% year-over-year last quarter. Bear number 3. Analysts are skeptical. The consensus analyst target is around $150, below the current price. There are 22 hold ratings versus only 11 buy ratings. The counterintuitive truth? Everyone already knows these risks. They're priced in. The stock is trading at 17 times forward earnings because the market sees these headwinds. The question is, what's next? Now let me show you why the bulls are excited. The thesis. AI is moving from the cloud to the edge. Today's AI ecosystem is dominated by centralized compute. Data centers powered by Nvidia GPUs. But that model doesn't scale to billions of devices. Running every AI query through the cloud is just too slow. Latency kills autonomous vehicles. It's too expensive. Data center costs are massive. It's too power intensive. Battery life matters. And it's too invasive. Privacy concerns. The solution? On-device AI. Run inference directly on your phone, your car, your security camera, your robot. Why Qualcomm? For decades, Qualcomm has optimized for power-efficient compute and connectivity, exactly what Edge AI demands. Their latest Dragonwing Q8750 processor delivers 77 TOPS of AI performance, enough to run an 11 billion parameter model on device. The counterintuitive truth. While everyone was watching Nvidia dominate the cloud, Qualcomm was quietly building the infrastructure for the edge. And the edge is a much larger market, billions of devices versus thousands of data centers. Now let me show you the growth engine that's already firing. Automotive revenue hit a record $1.33 billion last quarter, up 38% year-over-year. Qualcomm's Snapdragon digital chassis is now in vehicles from BMW, Mercedes, GM, and others. The design win pipeline? $45 billion. What does Qualcomm sell to car makers? Infotainment systems. That's your car's screen and entertainment, ADAS for driver assistance and eventually autonomous driving, and V2X connectivity, which means car-to-car and car-to-infrastructure. The counterintuitive truth? Investors still think of Qualcomm as a phone chip company. But Automotive is already a $5+ billion annual run rate business, and it's growing 38% annually. At that pace, Automotive alone could be worth Qualcomm's entire current market cap in just a few years. And here's the news that made the stock jump 15%. Qualcomm has secured a leading hyperscaler for its custom data center silicon. Who? Well, it's undisclosed, but likely Microsoft, Google, or Meta. What are they buying? 3 types of chips. First, central processing units using Qualcomm's Orion cores. Second, AI inference accelerators. And third, custom ASICs. The timeline? Initial shipments are scheduled for the December quarter. That means Qualcomm will generate meaningful revenue from the AI build-out, beyond just the edge, later this year. The counterintuitive truth? Qualcomm is no longer just an edge AI story. They're now a data center AI story too. And honestly, the market hasn't fully priced this in. Remember what happened to Marvell Technology when investors realized their data center role? The stock doubled. Qualcomm could be next. Now let me show you the math behind the $340 price target. Step 1. Revenue. Fiscal year 2025 revenue is about $44 billion. For fiscal year 2026, consensus is around $42.5 billion. Mainly due to Apple and memory headwinds. But if AI, automotive, and custom CPU chips drive 15% annual growth starting in fiscal year 2027, revenue could hit $65 billion by 2029. Step 2. Margins and buybacks. With a net margin at 25% on $65 billion, that's $16.25 billion in net income. The share count has already dropped from about 1.07 billion to around 950 million projected by 2029. That's $17 per share in earnings. Step 3. Valuation. The semiconductor sector average forward price-to-earnings ratio is over 35 times. Qualcomm trades at just 17 times forward earnings. Even if Qualcomm only gets a 20 times multiple, well below the sector average, that implies a $340 share price. That's nearly double today's levels. The counterintuitive truth? Qualcomm doesn't need a crazy multiple to double. They just need to execute. And that's exactly what CEO Cristiano Amon is doing. Let me leave you with the 3 secrets that connect everything we just discussed. Secret number 1. The AI phase shift. Blind spot. Phase 1 of AI was training in the cloud. Nvidia won that phase. Phase 2 is inference at the edge. That's Qualcomm's game. Most investors are still focused on Phase 1, but Phase 2 is where the next 10 times opportunity lives. Secret number 2. The hidden diversification reality. Wall Street still categorizes Qualcomm as a handset company. But automotive is already $1.3 billion per quarter. IoT is growing. Custom silicon is coming. The diversification is real, but the valuation hasn't caught up. Secret number 3. The hyperscaler validation catalyst. When a leading hyperscaler chooses your custom silicon, the market notices. The 15% post-earnings jump was just the beginning. The real move will come when those shipments start and the revenue hits financial statements. So, what should you actually do with this information? If you're a growth investor, watch the June 24th Investor Day. Management is expected to quantify the data center opportunity and provide more details on the hyperscaler deal. That event could be a major catalyst. If you're a value investor, Qualcomm at 17 times forward earnings with a 2.24% dividend yield is already attractive. The downside is protected by the buyback, $20 billion newly authorized. Now, if you're worried about the risks, the Apple modem loss is real. The memory shortage is real. Third quarter guidance is soft. But these are known risks. The question is, are you willing to look through them to the AI opportunity, the counterintuitive truth? The best time to buy a transformation story is when the market is still focused on the old narrative. Qualcomm's narrative is changing. The valuation hasn't. Here's my question for you. Do you think Qualcomm can double to $340? Or is the Apple risk just too big to ignore? Drop your answer in the comments. I read every single one. Like and subscribe if you want more myth-busting analysis on AI stocks before the crowd finds them. I'll see you in the next video.